Okay, let's kick this off with a question that, when you first hear it, makes absolutely no sense. Think back to the 2008 financial crisis. The one that started in the American housing market. So why on earth was the US Federal Reserve spending hundreds of billions of dollars to bail out banks in Europe?
And we are not talking chump change here. We're talking about more than $500 billion. By December 2008, the Fed had pumped out over $580 billion in emergency loans. But not to save American businesses, no, to keep European banks from going under. It's a real mystery, and it points to a totally hidden part of our global financial system.
And the answer, it turns out, is this fascinating, almost secret story. It's the story of the Eurodollar shadow, a kind of parallel money system that got so big, so powerful, that it eventually forced the hand of its own creators to rescue it.
So let's unpack that global mystery. That gigantic, totally unexpected bailout, it was a signal flare. It showed the world that there was this massive, unregulated system, all running on US dollars, that had grown completely outside of America, way beyond the Fed's direct control. A system that had become so vital that if it collapsed, it would have taken all of us down with it.
Now, the key to this whole thing is a really simple idea, the Eurodollar. And don't let the name fool you, it has nothing to do with the euro currency. It's just a regular US dollar that happens to be sitting in a bank account anywhere outside the United States. Could be London, could be Tokyo, doesn't matter. And how these offshore dollars even came to be is really where our story begins.
And here's the really wild part. This multi-trillion-dollar system, nobody ever designed it. It wasn't planned out in some boardroom. It was basically an accident of history, born from the paranoia of the Cold War.
It really all kicked off with fear. See, back in 1948, the US froze assets belonging to Yugoslavia. The Soviet Union saw this happen and got spooked. They worried Washington could just seize their dollar reserves whenever they wanted. So what did they do? They moved their dollars out of New York and into banks in Europe, specifically a Soviet-owned bank in Paris. And get this, its telex address was Eurobank. And just like that, the market got its name completely by accident.
So that initial spark of fear was then fanned into an absolute wildfire by simple economics. Back then, US regulations put a cap on the interest rates that American banks could pay you, but outside the US, no rules. So European banks could offer way better returns on dollar deposits, and money just poured in. Then, after 1971, when currencies started floating freely, the global demand for dollars to manage risk just exploded, and this offshore market was the perfect, unregulated playground to make it all happen.
And when I say it grew fast, I mean it was explosive. In just 5 years, between 64 and 69, the market swelled by over 250%. What started as a little security trick for the Soviets was quickly becoming the essential plumbing for all of global commerce.
And here's the part that just blows my mind. By the mid-1980s, this offshore, unregulated ocean of dollars had actually gotten bigger than the entire official money supply inside the United States. Just let that sink in. There were more US dollars operating outside of the Fed's control than inside of it. A whole invisible monetary empire had been built.
So how is this shadow money even made? Well, it's actually a pretty clever accounting trick. No giant pallets of cash have to leave the US. It works like this. A company puts its dollars in a London bank. That London bank now has a credit with its partner bank back in New York. Then, the London bank just lends out that credit to someone else. And boom, a new Eurodollar is born. Not as cash, but as a simple entry on a spreadsheet, completely outside the Fed's rulebook.
For decades, this whole system worked like a charm. It was this deep, bottomless pool of cash that greased the wheels of the global economy. But in 2008, that pool of shadow money didn't just shrink, it froze solid. And that's when everyone finally saw the terrifying risk of having an unregulated system this big.
So here's the chain reaction. European banks had borrowed insane amounts of these short-term Eurodollars, and they used them to buy up assets tied to the US housing market. Those mortgage-backed securities. When the housing market went belly up, the value of those assets just cratered. Panic hit the system, and lending between banks just stopped overnight. All of a sudden, if you were a bank and you needed dollars to pay your bills, you couldn't get them. The whole system just seized up.
This whole crisis forced the Federal Reserve to do something they'd never done before. They fired up a tool called swap lines. You can think of it like an emergency credit card, but for central banks. The Fed loaned colossal amounts of US dollars to the European Central Bank, which then quickly passed those dollars on to their local banks who were starving for cash.
And this takes us right back to where we started. By the end of 2008,
These swap lines made up more than a quarter of the Federal Reserve's entire financial holdings. The Fed had to become the lender of last resort for a global dollar system it never created and certainly didn't regulate, simply because letting it fail was just not an option.
So, that's a pretty fascinating piece of financial history, right? An accidental money system gets so huge it needs a world record bailout? But here's the thing. This is not just a history lesson. This matters a lot, right now, because the same story is playing out all over again. This entire saga we just walked through, this whole story of an offshore, unregulated dollar system that was born from fear and grew in the cracks between the rules, well, it's happening again. Today, right now. It just looks a little different. The parallel is just uncanny. It's almost a perfect rhyme. The Eurodollar system was based in places like London to give big corporations access to dollars with hardly any oversight. Today, you have stablecoins like Tether based in offshore jurisdictions to give regular people all over the world access to dollars with, you guessed it, minimal oversight. It is the exact same playbook, just with new technology.
And the scale is already staggering. Just look at Tether. Its market cap has blown past $162 billion. This new offshore dollar system is growing at an absolutely incredible speed, and for a lot of the same reasons the old one did.
You know, a quote I came across in the research for this just nails it perfectly. It called this new system a retail Eurodollar for the digital age, and that's exactly what it is.
And the demand for it is just as real. For millions of people living in countries with runaway inflation or shaky currencies, holding a digital dollar isn't speculation, it's survival. It's a lifeline. It gives them a stability their own financial systems just can't, which is exactly what Eurodollars did for big global companies decades ago.
But, and this is a really big but, this is where the parallel stops being a cool history lesson and starts being a serious warning. Because there is one absolutely crucial difference between the old system and the new one. There's a huge piece of the puzzle missing.
Just remember, when the Eurodollar market broke down, the system had a savior. The Federal Reserve, maybe reluctantly, but they stepped in with hundreds of billions of dollars. They had to, because that offshore system was just too connected to everything else to be allowed to fail. The system had a backstop.
Today's massive, digital, offshore dollar market, it has no such protector. There's no central bank waiting in the wings to rescue it. And that leaves us with the exact same terrifying risk that brought the world to the edge in 2008, just with a new cast of characters. So the final question is, when this new digital dollar pool freezes, and history suggests it will, who's going to provide the swap line?